John, very good to see you. Today we are sharing 4 year-end tax tips. The end of the year is always a great time to start thinking about your taxes for the upcoming year. So we are sharing 4 tax savings tips that we can implement now to help us get on track for 2024. First, you say consider maxing out your Roth IRA or consider a Roth conversion. As the end of the year creeps up, people often call October Rothtober.
Right. Well, now we're in November, so I guess it's Rothvember.
Rothvember. I like it.
Yeah. If you can max out your Roth IRAs or your 401ks, do it. In terms of conversion, be very careful by maxing out because you can convert an entire account in 1 year. You don't want to do that. You want this to be as tax efficient as possible, and that takes income planning and your income for the year into consideration. So why do we do a lot of planning in November? 2 reasons. First and foremost, we have a good idea of what your income is going to be. That's crucial in Roth conversion and tax management planning.
Right.
Number 2, if you saw our video a couple months ago or in September, we talked about the September downturn, right?
Mhm.
September and October are down months. That's a great time to do Roth conversions. So that's the second reason. But especially Roth conversions, it has to be calculated. It has to be well thought out.
Right, exactly. Second, you say consider offsetting your gains by harvesting losses. This is known as tax loss harvesting. Can you explain how it works?
Yeah, so tax loss harvesting, that was really big last year. This is for non-retirement accounts. So if you had some accounts where you had losses in, you may be able to offset that through some tax loss harvesting or even some capital gains harvesting, in which you're really controlling the cost basis or what's taxable on your non-retirement account. So it's always just a way to look at, you lost some money in the market. How can we make that a little bit of a silver lining? Well, tax loss harvesting is a way to help with the tax liability of those losses. And you can do a carry forward into 2024.
Right. Third, you say seek tax efficient investments. What are you talking about?
Yeah, well, while we're on, the topics of taxes for non-retirement accounts, are your investments really tax efficient? Or are you in a lot of mutual funds that are triggering phantom capital gains? Like, do you get these reports every year that show that you have capital gains and you never took out a distribution? Well, now's a good time to do a little audit, a tax audit, and make those changes for 2024 and beyond.
And four, you say we can be much more tax efficient with our charitable giving. Explain.
Well, what happens in November? Thanksgiving. And this is really a time of year that, the country's generosity and people's generosity really come out. And I have a lot of clients that do charitable giving. And there's 2 great ways to do this. Number 1, if you are over 70 and a half, the qualified charitable distribution is a powerful way to give to charities. Because remember, with the 27 Tax Cuts and Jobs Act, a lot of charitable contributions are no longer deductible. Well, the qualified charitable distribution is like a tax credit. However, here's the problem. We may plan to do some QCDs, but in 2024, because if you've taken any money out of your IRA, it's not going to qualify for the qualified charitable distribution anymore. That QCD money has to be the first money out of the account. So this may be better for you to do in 2024. But while we're at it, if you don't qualify for the QCD, you can start to look at your taxes in 2-year blocks. And what I mean is tell your charity, tell your church, listen, I'm going to make a big donation here in November and December. It's going to be my charitable contributions for 23 and 2024. That's going to boost you in an itemized deduction. So you will get the deduction for your charitable giving. And then in 2024, you just take your standard deduction. That's another way that we take a charitable contribution that was no longer deductible and now make it deductible.
Right. And the charity is still getting this money. It's such a great win-win. I love the way that you think about tax planning, John. If somebody has questions about any of these strategies, what's the best way to reach you?
Well, if you always want to learn more about tax planning, visit our website, www.gosecurus.com. We have tons of videos, especially when it comes to Roth IRA conversions, tons of podcasts. Taxes are a cornerstone of my practice. While you're on the website, if you want to schedule a 15-minute phone call for any questions, or you want a complimentary clarity and vision consultation, you can head over to the Contact Us tab and you can set that up from there. Or if you like doing things the old-fashioned way, give us a call at the office, 858-935-6210, and ask for Emily, and she will get you on my schedule.
All right, John, thank you.
Thank you, Erin.